The no vote in Sunday's referendum in Greece has increased market chatter about the probability as opposed to the possibility of Grexit, the country leaving the Eurozone. But how straightforward would it be for Greece to set up a new currency? With me to discuss this is Philip Stafford, FT Trading Room editor. Phil, I'm envisaging some kind of an announcement, okay? So Greece suddenly says either we're out or the European Commission says you're expelled from the Eurozone. Walk us through the next steps. What happens in the days after that?
Well, if we imagine that somebody says, right, we're going to set up a new currency, the first thing you would really need is a currency code so that the world's computers used in the financial system for payments and for trading securities and derivatives and all the rest of it can actually recognise it. For that, you actually need to get it from the International Standards Organisation, which is based in Switzerland.
So they would apply to that's who you apply to, isn't it?
Yes. And you just need a small code. It will be 3 letters, and that could then be dropped into all the technology. And theoretically, because there are so many currency codes in the world, then you would just be able to do it overnight. In reality, that just wouldn't be able to happen, really.
Is it a question of Greece, printing money, finding some old printing presses of the drachma and starting that all over again?
Well, interestingly, you can't actually use the old currency code because that would then confuse the computers. So you actually need to have a new one because there are also some long-standing derivatives contracts, forwards and options that were probably still paying out into the old drachma. Not many of them around, but they're still there. So you would need a new one. And then when you do that, you're also going to have to think about some of the new and existing forward contracts, which again, maybe 10, 20, possibly even 30 years out, paying out quite regularly. And so you're going to have to think about legal aspects of that, maybe having to rebook contracts, denominate the currency. There are an awful lot of tricky legal issues. It's not so much the mechanics, it's really the legality.
So as well as the legal issues, you're going to have a great deal of market turmoil. I mean, one of the features of the Greek crisis has actually been the stability of the euro in this time, and it's been a climate in which the euro has stayed pretty much steady against the dollar. But what I'm trying to envisage is that, okay, the market has been getting used to the idea of Grexit, but when Grexit happens, there could be that kind of market turmoil, which might make it even difficult for, the idea of Greece to start up a new currency. What kind of market turmoil impact might there be? Well,
again, it's the $64,000 question. Nobody really knows. The interesting thing about if you're trying to set up the currency is exactly what level you set it up at. It would have to be a discount, a disadvantage, in order to make your economy competitive. But at that point, the issue may then begin to switch to, well, how stable is the Eurozone? You've got rid of this issue that has been around for 5 years. Will the market therefore have enough comfort, enough confidence that what survives will be fairly stable, that would then allow Greece to be able to base their currency at a new level? I
mean, that's the biggest worry, because actually we needn't, if all this was working well enough for Greece to set up drachma 2, it's all about whether the market is settled and comfortable enough with the Eurozone as a result. So is that we need to look at how time actually can help us in this process?
Well, indeed. In order to really set up a currency fully, time is really the issue that you either have or don't have. In an ideal world, you would try and set something like this up over 3 years. The euro itself took 3 years to introduce. Changing over the standards, the ISO standards. Again, a 3-year process in order to bring the drachma, new drachma, whatever it were to be called, into, say, a settlement service like CLS. Good couple of years. In the meantime, what you would probably have people maybe trading drachma, but they would be over the counter. Therefore, you would have to put up collateral in order to back it, just in case there's any counterparty credit risk from the bank. Now, would anyone be trading it given that risk? Don't know. Would anyone be trading it given there isn't a lot of drachma around? Don't know. So it automatically sort of lends itself to a long time frame, but politics is politics, and a week is a long time in politics. 3 years is, especially in Greek politics, is a very long time indeed.
There you have it. Thank you, Phil. So if you thought that the Greek drama and debt crisis has been played out long enough, well, you ain't seen nothing yet.